Hey guys, this is Julie. I want to go over a concept with you so that you can understand it. We can do a lot with the realized volatility and the historical volatility. So, Rvol for realized, not relative, but realized, what the current range is day to day. Um, and so it's not related to anything else, it's just the current day range, relative, or excuse me, realized volatility. And then historical volatility, which is the last 14 days. So the options do something very similar, whether you realize this or not. You can calculate your option pricing models in the current implied volatility, right? So that would get you a premium, call premium of 2042 and 2242 on the current at the money strike. So when you get 20 points away from up or down this 56.25, you're going to expect to see some market maker decision making, whether they're going to, you know, fade it or, come, go with it even stronger. Um, so you always, monitor your call and put premium as well as your delta, because that delta is your target to trade to. So if it breaks 20, you want to go to 49. So the same thing with the settlement calcs. So you can anchor this on the prior settlement instead of the current volatility, and there's going to be a difference in implied volatility premium. So on settlement, you get more premium, so it's 33.25 and 35.25. So you go from 20 to 33. So that's another level to hit. So you would go to, instead of going straight from 20 to 49, you would go 20, 33, then 49. So you need to, that's what this automatic, adjustment is that market makers make when they place their order. They need to make sure that they're covering both 33 and 49 delta, um, be, or away points away from the at the money strike. And if they break 20, they'll be hitting that, going from 20 to 33, um, for their profit targets and hedge decisions. And then at 49, that would be their decision to go out of the money or to stay in the money and come back. So the RVol IV vol does the same thing. Excuse me, RVol HVol. I'm sorry. So the one period vol on top is your realized volatility, just the standard one period, 1, 2, 3 point range, as well as levels, points and levels on the close and the open. So you can see we go from a 138.25 1 day range versus a 91.75 14 period range, showing you that range had been expanding going into the end of the month. So we haven't quite finished the end of the month. The end of the month is not until, 3 o'clock p.m. Chicago, or 4 o'clock, um, for the final settlement. So are we going to, hit a full 138 point range tomorrow? Or do we try to shoot that for that 91.75 or 68%, which would be 65.50, um, versus 99? So somewhere between 65 and 99, or do you shoot for, you know, um, the 138? I can tell you that the RVol 49 points for that delta is at the Rvol daily one. So that 49 points is very, very high probability of getting hit because it's our Rvol D1. So we can automatically come back to that 56.25 and see where they're going to be taking it from 56.25. We're going to be taking it from 56.0250, which was the prior settlement. So we go up and down off the settlement. So we need to bracket this between these points going up and down from the 5625 as well as the 560250. So we'll take the implied vol from the 5625 and the Jats PT off of the settlement. And then we'll take a look at the chart. Does that sound like a plan? So let me pull up a chart. Okay, so I have come in and drawn the levels above and below the 5625 strike. And what we want to do is add the Rvol on top of it and then the Hvol. So here's the Rvol on the open. And since we're going into the close, I want to change that to the close. All right, so there's our close. One period. And you see that it went to the bottom of the Rvol 3. Right there at the bottom of the 1, 2, 3 of the Rvol on Friday. So we will add our daily close, 14 period, Hvol. All right, and there's the 14 period Hvol. So you can see that the levels align quite well where price goes to on a day-to-day basis. And if we want to get a point range above and below where the market might open for the Rvol and the Hvol, all we need to do is put the daily 1, 14 period Hvol on the chart, and then come back and put an Rvol on top of it, and I will make the Rvol all one color. Let's make them all green, 3 lines. And we'll put that on the PT2. All right, so our Rvol is in green and our Hvol is the white, blue, orange. And so we go from 49, 50, 99, and 138 versus 32.75, 65.50, and 91.75. So you can see this 99 and 91.78, 91.75 rather, have a good confluence. And that's really the only confluence that sticks out. So I'll be looking for that 91.75 to 99 point range today. But you can get an idea of where the market is going to open by going to 32.75, 49, 65.50, 91.75, 99, and 138.25 above and below the open and close. So I'm going to put you on pause, put those on the charts, and then come back and we'll take a look. Okay, so I've got all the levels on the chart, and The 91.75 point range runs nicely from this level right here from 55.69.75 up to the 56.68 level. So that is your middle of the range, and that's probably where you would expect to see those decisions um, fade it, or if it does break, it's going to break out hard. Likewise here, fade it, or if it does break, it'll break out hard to the downside. And the short gamma, just, FYI, favors that the bottom probably will break, but the top could too, because they're both running short gamma at that point, which is unusual. So they both have the potential to run. So just be careful. Monday, it's going to be slippery when wet. Okay? I think the dealer makes more by selling off. Now, whether the fund managers are screaming about, their portfolios, right, losing too much already, and that's when we want to come in with our higher time frame analysis. 55.70 on our monthly contract is right here at the bottom. So we'd be testing the bottom. That's why it's going to be such a strong level to trade, right? We're going to be right back at that 1.25 of the monthly range. So if that breaks, we could really start hitting these lower levels. And 5500, 5503. Um, is a level that we have. And so 5464, 5486, 5491.75 is the monthly two. So if that does break this 5491, 5486 area, um, potentially 5464, but those are my downside levels, 5464 and 5486. So, so this 5491 would come into play. So yeah, um, play it loose, right? So maybe we got our drop and pop back up there. So we'll see. If it gets real hot on this bottom, I would be very careful to buy it. And 5650, likewise on the way up. 5625, 5650 would be an area to potentially see them to fade it. And if it doesn't fade, it's going to break hard to the upside. Both are short gamma on those edges. So that means that when it gets price goes lower, the gamma goes higher. So they're making more money, right? They're getting more gamma, adding gamma back, um, which they want. If it goes higher, the gamma falls off. They're losing gamma, they're short gamma, so they'll be trading with it. There's not enough hedging to take place to stop it. So it can go higher much faster. So, just, it'll be wild. All right. Let's see what happens tomorrow. Thank you so much, guys. This is fun. Talk to you later.